Welcome back. Didn't take a check on the Indian markets for a bit, and that's important because once again at that around that 59.90, 59.80 mark, we are seeing, 58.80 mark, we are seeing a bit of a bounce back coming in. So perhaps at least for the moment, the markets are, the bottom is not falling off, though it is still an overall weak market. Just check if there is any difference in the advanced declines. We were going towards 5:7. Okay, we are now is 5:6, but still the number of declining stocks are dominating. Okay, personal finance is what we promised, and that's what you're going to get. Suresh Surana, the expert from RSM Astute Consulting Group, joins us. Suresh, thanks much. Well, the question, as we said, is how should a person avoid paying capital gains tax on the sale of immovable property?
Yes, the sale of immovable property is a very common event which happens, and in most cases there is a significant capital gain. The first thing, before you go into exemption, you should just check couple of things, that the sale consideration is not less than the stamp duty valuation, because if that is the case, then the stamp duty valuation is taken as the sale consideration for the purpose of the second point is that you are entitled to claim any expenditure which is incidental to transfer, such as transfer fee or any brokerage charges. Now coming to the exemptions, there are three types of exemptions available in case you have long-term capital gains. The long-term capital gain arises if you have been holding the immovable property for more than 3 years.
Okay.
Now these exemptions are under section 54, 54 EC and 54 GB. Section 54 deals with if you are reinvesting the capital gains in the purchase or construction of another residential house property within the specified period, then you can claim the exemption in respect of the same. The purchase must happen within a period of 1 year before or 2 years after the sale, and if it's a case of construction, it must be done within a period of 3 years. The new house what you are acquiring must be held for at least a period of 3 years.
Okay.
So these are the principal conditions for section 54. The second is you can invest the capital gains in the bonds which are specified, which is the National Highway Authority of India and the Rural Electrification Corporation under section 54 EC.
Yeah.
The investment must be made within a period of 6 months and up to a maximum of rupees 50 lakhs. And the third exemption is available, which is under section 54 GB, which is for encouraging the entrepreneurship. So if you sell an immovable property and if you invest the sale consideration in the share capital of a company which you own at least 50%, and that amount is used to acquire plant and machinery, then again you can claim the exemption in respect of the same.
Okay,
if you are selling within a period of 3 years, then there is a, you don't get any benefit and you have to straight away pay the tax at the normal tax rate applicable to you.
Okay, let's get in a quick query on the same as well. Shamsul Qureshi has sent us an SMS query from Raigar, sorry. He says he has an income of around 4 lakhs annually, and what is the maximum tax rebate that he can get on the same? Suresh, your thoughts?
Yes, so I would just like to add that as you have the basic exemption of rupees 2 lakhs, but the recent Finance Act has brought a new tax rebate which is available to those people who are having. The line is disconnected.
No, please go ahead. We can hear you.
In those cases that.
Okay, I think we've lost him.
Okay, we've lost him. We were trying to reconnect. Okay, we will have to postpone that answer to that question for a later date. We have to wrap up the show. We have reached the end in terms of time, but markets actually have steadied after falling a bit. Looks like a zigzag market, very, very rangy at this point in time, but an overall dampness. We'll take a break and business lunch will follow.